There's a newspaper archive in the New York Times dating back to the 1850s. Searchable, digitized, available to anyone with a library card. And sitting inside it, dated October 16th, 1911, is a headline that demolishes one of the most shared conspiracy theories on the internet. Isidor Straus urges new banking plan. Strauss, the man the meme says was murdered for opposing the Federal Reserve, 6 months before he boarded the Titanic, urging the nation to adopt the very banking plan the conspiracy says he died resisting. I found this while checking dates. I expected to confirm the theory. I confirmed something else. The man who died defending the bank, they say he died. Opposing. The date stopped me cold. October 16th, 1911, 6 months before the Titanic sailed. A headline in the New York Times: Isidor Straus urges new banking plan. The owner of Macy's, one of the three wealthy men who would die on the Titanic, publicly defending the very banking system 100 years of internet conspiracy, says he was murdered to prevent. I'd gone looking for the smoking gun. I found something stranger. I found a man arguing passionately for the thing he supposedly died opposing. I need to back up. I came to this story the way most people do. Through the meme. You've seen it. 3 portraits. John Jacob Astor IV. Benjamin Guggenheim, Isidor Straus. The caption: these 3 men were the richest opponents of the Federal Reserve. They all died on the Titanic. The Federal Reserve was created the following year. J.P. Morgan, who owned the ship, cancelled his voyage at the last minute. It circulates every few months. It's been shared millions of times. And every verifiable detail in it, the ownership, the cancellation, the deaths, the timing, is technically accurate, except the one that matters, the claim that holds the entire theory together, that these 3 men opposed the Federal Reserve, has no documentary basis. I spent weeks checking. The Washington Post checked in 2018. Reuters checked in 2021. Snopes checked in 2022 and again in 2024. Titanic researcher George Bay, with over 45 years of primary source work, confirmed it to Reuters. No documentation exists. Not a letter, not a speech, not a congressional filing, not a newspaper editorial. And in the case of Isidor Straus, the evidence points in the opposite direction. But here's what kept me going. Because the conspiracy is wrong doesn't mean the real story is boring. The real story involves a secret meeting on a private island, 20 years of institutional denial, a financial panic that nearly collapsed the American economy, and a legislative fight that reshaped how money works in every American's life. The conspiracy is a cartoon drawn over a photograph. The photograph is more interesting, so I followed the facts. All of them, even the ones that didn't cooperate. Start with what's verified about the 3 men the theory depends on. John Jacob Astor IV was the wealthiest passenger aboard. His probated estate came to approximately $87 million in 1912 dollars, roughly $2.5 billion today. The New York Times reported $150 million at the time, but the actual probate records, distributing $85 million with $69 million going to his son Vincent, are the reliable figure. His fortune was overwhelmingly Manhattan real estate, accumulated across 4 Astor generations, stretching back to the first American multimillionaire. He built the Astoria, half of the Waldorf Astoria. He owned the St. Regis Hotel. He held patents for a bicycle brake and something called a vibratory disintegrator. He'd served as a lieutenant colonel in the Spanish-American War, personally financing an artillery unit. He'd published a science fiction novel in 1894. His documented position on the Federal Reserve? None found. The Washington Post's investigation turned up nothing. Snopes, citing a 1911 New York Times article, reported that Astor was very much in favor of the idea. Not opposed, possibly supportive. At minimum, silent. Benjamin Guggenheim is where the numbers start falling apart. Online claims put his fortune between $4 and $25 million. His actual probated estate was $2,639,597 net, roughly 75 to 85 million today. Substantial, but a fraction of what the conspiracy requires. The Guggenheim mining empire was real, built by his father Meyer through Colorado silver and Mexican smelting operations. But Benjamin had left the family partnership years earlier. He'd become president of the International Steam Pump Company, which employed 10,000 men, but went into receivership in 1914. At his death, his business affairs were, in the words of a Guggenheim family historian, in almost total disarray. His estate held 61,000 shares of pump company stock, most of it pledged as collateral against 500,000 in bank loans. His documented position on the Federal Reserve, nothing whatsoever. The Washington Post confirmed that a digital search of major US newspapers from the era doesn't show Guggenheim taking any position on the Fed. He was an industrial figure, not a banking policy participant. Then there's Isidor Straus. And Isidor Straus is where the theory doesn't just weaken, it inverts. Straus and his brother Nathan became Macy's partners in 1888 and took full ownership in 1896. He served in the U.S. House of Representatives in 1894, representing New York's 15th District. He was offered the position of Postmaster General by President Cleveland and declined. He served as director of Hanover National Bank, president of the Retail Dry Goods Association, and vice president of the New York City Chamber of Commerce. His probated estate was $3,859,514, roughly $115 million today. In 1906, Straus served on a 5-man commission of the New York Chamber of Commerce that delivered a currency report calling forcefully for the creation of a central bank. His fellow commissioners included Frank Vanderlip of National City Bank and Dumont Clark, an advisor to J.P. Morgan. This wasn't peripheral involvement. This was a formal, institutional effort to build the architecture that became the Federal Reserve. On October 16, 1911, the New York Times ran the headline, "Isidor Straus urges new banking plan." He was publicly defending the Aldrich Plan, the direct precursor to the Federal Reserve Act. 2 days later, a second Times article showed him defending the proposal again. 6 months later, he boarded the Titanic. The conspiracy says he was killed to clear the path for the Federal Reserve. The primary sources say he was actively helping to build it. Now, the conspiracy is wrong about the victims, but the institutional connections it waves at? Those are real, and they deserve honest examination. J.P. Morgan did own the Titanic. His International Mercantile Marine Company, Incorporated, October 1, 1902, acquired the White Star Line in April of that year after the longest negotiation Morgan ever undertook. IMM was consistently unprofitable. It never paid a common dividend. White Star was its only subsidiary that made money, but Morgan controlled the ship. Morgan did have a personal suite reserved, B-52, B-54, and B-56 on B deck. Smithsonian Magazine described a private promenade deck and custom cigar holders. And he did cancel. The booking chain tells you how ordinary this was. Henry Clay Frick booked the suite first, then cancelled when his wife sprained her ankle. Morgan took it, then cancelled. J. Horace Harding assumed it, then cancelled for an earlier Cunard sailing. J. Bruce Ismay, the White Star chairman, who would controversially survive the sinking, finally occupied it. Morgan's stated reason, illness and business interests that lengthened his stay abroad. He was 74. He would be dead within a year. A New York Times correspondent travelled to Aix-les-Bains, France, 2 days after the sinking, and found Morgan at a spa resort, receiving morning massages and sulphur baths. He told the reporter, "Monetary losses amount to nothing in life. It is the loss of life that counts." Was his cancellation suspicious? Consider the company he kept. George Washington Vanderbilt cancelled April 9th. Robert Bacon, former Secretary of State, was delayed because his successor, hadn't arrived in time. Guglielmo Marconi was offered free passage but preferred the Lusitania's stenographer. Milton Hershey's cancellation is verified by primary source, a cancelled $300 check dated December 18, 1911, preserved in the Hershey Community Archives. Theodore Dreiser was talked into a cheaper ship. Contemporary newspapers mocked the phenomenon. Michigan's Sault Ste. Marie Evening News reported a Just Missed It club with 6,904 members on April 20th. By April 26th, Ohio's Lima Daily News had the membership at 118,337. Wealthy people cancelled first-class Atlantic crossings the way they cancel restaurant reservations, constantly and without drama. But Morgan's role in central banking is not conspiracy, it's documented history, and it's remarkable. During the Panic of 1907, Morgan, at age 70, functioned as a one-man central bank. The trigger came on October 14th when Otto Heinze attempted to corner the stock of the United Copper Company. By October 16th, the stock had collapsed from nearly $60 to $10. His brokerage went bankrupt. Within days, contagion spread. On October 22nd, the Knickerbocker Trust Company, New York City's third largest trust, experienced a full run. Depositors withdrew $8 million in less than 3 hours. That's approximately $276 million today, pulled out in the time it takes to watch a movie. Knickerbocker suspended operations. The panic spread. Call money rates spiked from 9.5% to 70%, briefly hitting 100%. The NYSE fell nearly 50% from its prior peak. Industrial output dropped 17%. Unemployment roughly doubled. Morgan organized a rescue syndicate. He deployed Benjamin Strong to audit threatened institutions. He channeled cash directly to the NYSE trading floor. He coordinated $37.6 million in Treasury deposits. And on the night of November 2nd, 1907, he locked approximately 40 to 50 trust company presidents in his private library and refused to let them leave until they pledged a $25 million loan. They signed at 4 in the morning. The political lesson was unambiguous. The U.S. Senate's own history states it plainly. The need for a central bank became evident during the 1907 panic because the federal government lacked the tools to respond and had to depend on private bankers. One man shouldn't have that kind of power. Everyone agreed. The question was what to build instead. Sometimes I pause and ask myself if I'm making connections that aren't there. Morgan owned the ship. Morgan was central to the banking debate. 3 wealthy men died. The Federal Reserve was created 20 months later. Maybe the temporal proximity is just proximity. Maybe the human brain is wired to see causation in sequence, and I'm falling for it. But then I look at what actually happened next, and the documented story is stranger than the conspiracy it replaced. In late November 1910, 6 men boarded a private rail car at the Hoboken, New Jersey train station. They arrived one at a time. They'd been instructed not to dine together. They used only first names, Nelson, Harry, Frank, Paul, Piet, Arthur, calling themselves the First Name Club. One carried a borrowed shotgun. Their cover story was a duck hunting trip. The regular staff at their destination, the Jekyll Island Club off the Georgia coast, had been given 2-week vacations. Replacement servants who wouldn't recognize the men were brought in. There was no telephone or telegraph contact with the outside world. When reporters appeared at the Brunswick, Georgia train station, Henry Davison went out and deflected them. Senator Nelson Aldrich, Republican chairman of the Senate Finance Committee, father-in-law of John D. Rockefeller, Jr., had convened the meeting, most likely at Davison's suggestion. Morgan, though he didn't attend, almost certainly arranged use of the club's facilities. He was a co-owner. For 9 or 10 days, including a Thanksgiving dinner of wild turkey with oyster stuffing on November 24, 1910, these 6 men drafted the blueprint for a National Reserve Association. Paul Warburg, a German-born partner at Kuhn, Loeb and Company, with the deepest expertise in European central banking, did the bulk of the writing. The key disagreement was between Aldrich, who wanted a single European-style central bank, and Warburg, who argued that American political reality demanded the appearance of decentralization. Warburg won. The participants denied the meeting for 20 years. Journalist B.C. Forbes first revealed it in 1916, but the account was dismissed as a yarn. It wasn't formally acknowledged until 1930. The most candid description came in 1935, when Frank Vanderlip published his autobiography and wrote, "Discovery we knew simply must not happen, or else all our time and effort would be wasted. I do not feel it is any exaggeration to speak of our secret expedition to Jekyll Island as the occasion of the actual conception of what eventually became the Federal Reserve System." That's not conspiracy, that's the participants' own words. The plan they produced failed politically. Aldrich's name was toxic to Southern and Western Democrats. The 1912 Democratic Platform specifically repudiated the Aldrich Plan as a tool of the money trust. When Democrats won the House in 1910 and the White House and Senate in 1912, the plan had to be recast. Representative Carter Glass and Senator Robert Owen reworked the framework. President Wilson insisted on a government-appointed central board. William Jennings Bryan demanded currency notes be government obligations. Louis Brandeis counseled Wilson that these changes were essential. The governance changed. The technical banking mechanisms did not. Paul Warburg published a line-by-line comparison in 1930 proving this. Vanderlip wrote that the Aldrich Plan's essential points were all contained in the plan that finally was adopted. Federal Reserve historian Gary Richardson confirmed the overlap was extensive, noting that much of it was nearly identical in its technical provisions, with only the political structure rearranged. On September 18, 1913, the House passed it, 287 to 85. On December 18, the Senate passed it, 54 to 34. On December 23, Wilson signed it at 6 in the evening, using 4 pens. Every Democrat present voted yea. All but 4 Republicans voted nay, nearly straight party line. The claim that it was passed on Christmas recess with only 3 senators present is fabricated. 68 senators voted on the final Senate vote. 358 House members voted on the conference report. The legislation had been debated for months. Meanwhile, the Peugeot Committee had been pulling back the curtain on concentrated financial power. Its investigation, running from May 1912 to February 1913, found that a cartel led by Morgan, George Baker, and James Stillman controlled an estimated $2.1 billion through 7 banks and trust companies. 5 firms held 341 directorships in 112 corporations, with aggregate resources of $22.245 billion, against total NYSE capitalization of roughly $26.5 billion. Morgan testified before the committee on December 18 and 19, 1912, traveling to Washington with 15 lawyers. Asked if banking was based on credit, he replied, "Money is gold and nothing else." Asked if he had power over any department of industry, not the slightest. The committee found this untenable. He died on March 31, 1913, in Rome, 9 months before the Federal Reserve Act was signed. His associates blamed the Peugeot hearings for accelerating his decline. Here is the timeline, compressed. Follow the dates. October 1907, financial panic. Morgan personally rescues the banking system from his private library. May 1908, Aldrich-Vreeland Act creates the National Monetary Commission under Senator Aldrich, Rockefeller's father-in-law. 1906 to 1911, Isidor Straus serves on a Chamber of Commerce commission calling for a central bank, then publicly urges its adoption in the New York Times. November 1910, 6 men draft the Aldrich Plan in secret on Jekyll Island. The participants deny it for 20 years. April 1912, the Titanic sinks. Astor, Guggenheim, and Strauss die. None of them opposed the Federal Reserve. One was actively building it. Morgan, who owned the ship, cancelled his trip for reasons documented as mundane. May 1912, the Peugeot Committee begins investigating concentrated financial power. December 1912, Morgan testifies. March 1913, Morgan dies. December 1913, Wilson signs the Federal Reserve Act. 68 senators vote. It is nearly party line. Each step documented, each date verified, each connection real. But the shape they form is not the one the conspiracy promised. So why does the meme survive? Because the real story contains genuinely unsettling elements. A private island, a secret meeting, 20 years of institutional denial, a concentration of financial power so extreme that 5 firms controlled directorships worth more than the entire New York Stock Exchange. A single man who could lock 50 bank presidents in his library until they signed. These are facts. They're in the congressional record, in the participants' own memoirs, in the Federal Reserve's official histories. The conspiracy takes these real, uncomfortable facts and attaches them to a murder plot that has no evidence. And in doing so, it actually makes the real story easier to dismiss. Call it a conspiracy theory, and you don't have to think about the Jekyll Island meeting. You don't have to sit with the Peugeot Committee findings. You don't have to ask why 6 men drafted legislation in secret and denied it for 2 decades. Why did the Jekyll Island participants use false names and replacement servants and borrowed shotguns if what they were doing was simply good governance? Why did they deny the meeting for 20 years if the plan they produced was in the public interest? Why does the Federal Reserve's own history acknowledge that the technical mechanisms of the Aldrich Plan survived almost unchanged into the final act, while the political framing was rebuilt from scratch? Why did a system designed to prevent any single man from holding Morgan's power end up governed by a structure whose independence from both elected officials and private bankers remains contested to this day? And why, a century later, is the most widely shared version of this story the one that requires you to believe Isidor Strauss was killed for opposing the very institution he spent his final years urging the nation to build? The conspiracy gives you a villain. The facts give you a system. The system is harder to see, harder to name, harder to resist. Maybe that's why the meme works. A murder plot has a beginning, a middle, and an end. A pattern of concentrated power that designs its own oversight has none of those things. The archives are still there. The 1911 New York Times articles, the Peugeot Committee transcripts, the probate records, the Jekyll Island Club's guest ledgers, the cancelled checks and the booking chains and the floor votes. The facts don't cooperate with the theory. They never did. But they tell a story that doesn't need a conspiracy to keep you up at night.